Welcome, everyone. I'm your host, Tiger Stacker, and I want you to be successful in your stacking and investing strategies. So today I have an awesome interview for you with my guest, David Morgan. David Morgan is an analyst, speaker, and specialist in precious metals. In addition to being an intelligent man, his accomplishments have been recognized by the Wall Street Journal, CNBC, and Fox Business News. In addition to the Silver Manifesto and the host of the Morgan Report on YouTube, you can also find him on themorganreport.com. So without further ado, I want to welcome David Morgan. Welcome, David.
Tiger, it's good to be with you.
Nice to be with you too. And it's certainly an honor to have you on my show. Now, knowing that you're a busy fella, I'll just get right to it. But please be yourself and think of this channel as your channel. As a first-time guest, I love origin stories. How did you get into stacking? How old were you? And why did you get into precious metals?
Well, I came through it more of a why than a what. I was a young man when I first started paying attention to how money actually works. Credit cycles, inflation, a long history of currencies losing purchasing power over time. I was 11 years old when the Johnson slugs came into being. Before that, I was getting 25 cents a week in silver quarters for a few years from, age 9, 10, 11. My dad dropped one of those Cupro nickel things in my hand. I thought something's wrong here, but I couldn't really articulate it as a kid, but I did note it. And most of the adults around me didn't seem to notice it at all. So precious metals really appealed to me because they're no one else's liability. So kind of took off from there. When I was able to start the workforce and save money, I started looking into investing, and really it's more of a gold bug than silver at first. And after the Hunt situation, it really fascinated me. Why did they go more to silver than gold? And that's when I really took off on the silver side.
Yeah, that was an interesting time. I was just a little kid back then. I watch a lot of your precious metals interviews with people like Daniel Diaz with Citizens for Sound Money and Jesse Day with Commodity Culture. I was impressed with you talking about the tri-metal standard and how the penny was going out of circulation and the increased price of silver and gold. Where do you see silver and gold in our fiat currency heading?
Yeah, well, I think that's really a good insight. Most people miss it. But when a society keeps its smallest coin economically viable or can't keep it viable, it's a signal. It's not the end of the world, but it's a signal that the unit of account is being degraded over time. When the U.S. stopped producing circulating pennies, in other words, taking them out of circulation, this is an admission that the inflation has won the battle and that the currency is becoming worth less, and is heading toward being worthless. So where this leads is about, silver becoming the currency of tomorrow. It's not about being the currency of tomorrow. It's more about loss of confidence in purchasing power. And fiat systems tend to evolve more about control and friction. The powers that be, the money powers, as I refer to them, really don't want to lose control, and they will do almost anything. So gold remains the monetary metal of choice. Banks use it. They admit it, not openly, but they all know that it is the ultimate money. And silver remains a monetary asset, but it's an industrial hybrid. So many people diss it as having monetary value, but the market thinks otherwise.
What do you think is causing the increased prices, then the recent drop, and now the slow recovery in precious metals, especially silver? Is it the overprinting of the dollar, the geopolitical events, the Trump administration and expanding into areas such as Venezuela and Greenland, global fighting, the desire of other countries to want to expand geographically, such as Russia into Ukraine, China into Thailand, and or the U.S. wanting to expand into the areas I've just previously mentioned?
Yeah, there's a lot to unpack there, but as you alluded to, it's not one thing. It's a stack of causes. First of all, monetary reality, expanding debt, fiscal stress, and long-term currency debasement are the backdrop. We even talk about the debasement trade now, which is a main meme. It's been around for a few months. And of course, the first time I think I ever got on the internet and did my first interview, I talked about debasement of the currency, and now it's out in the mainstream. Second, trust and uncertainty. Geopolitical tensions increase, and it increased the desire for nation states to put reserves into something they can trust with no counterparty risk. And that's just the way it works. And that's why you see China, India, and a lot of European central banks, et cetera, buying more gold hand over fist the last couple of years. They know that that is, again, the most viable, best collateral going forward. Silver is a special case. It's not just a store of value. It's critical. It's critical for a high-tech society. When investment demand shows up at the same time that the industry needs the metal, that's going to put a double whammy on the price, as we saw recently. And as you said, it's backed off. A quick note on that. Anything that goes up that strongly, I don't care if it's soybean oil, cotton, or cocoa, they're all going to pull back and pull back rather violently. Look, silver went up in 2025 140%. It went up almost 70% in the month of January. If you don't think it wasn't due for a pullback, then you don't know how those futures markets work, period. And I'm not trying to defend the bankers. Anyone that's listened to me for more than 5 minutes know that I am not favorable to the whole system at large and how the money powers, the banking elite, control the population. Having said that, this was not a banker-only situation. It was a situation that was untenable and it had to come back. In fact, and last comment, Tiger, is actually healthy. People that were on leverage probably hate me for saying that statement. People that were counting their chickens before they cashed in at $100 silver might not like me. But the facts are, you do not want a straight up market that exhausts and then it's over. We want a long-term bull market where we do have these scare outs. Like I just said, the bull shakes off a lot of people that are believers because of these type of moves. But in the long run, I don't think $150 silver is out of the question, which is higher than it's been. And I wouldn't rule out 200. In fact, you could go beyond that, but I want to get the cart in front of the horse yet. And we're going to have to work off this overbought situation. But again, in the longer term, it's healthy. Yeah, it's painful now, but I think if we're patient later on, we'll be happy. We have a more liquid market. A lot of people that wanted to cash out at 100 were finding out that their local dealer was bid back like $15, so 85, take it or leave it. Which, of course, from today, while we're doing the interview, sounds pretty good because I think the last print I looked at was around 75. But nonetheless, this is a very, very important time in financial history, and especially the role that the precious metals are playing right here and right now.
My local shop is 15 back when she's better than most other places. I've seen that in my area too. I think it's going national. Approximately 3 years ago, you talked about a 300-year cycle, which you said we are starting to go into again, which tends to make people run to the safe haven of silver and gold. Do you still feel that way? And how deep are we into that cycle?
Yeah, I'd say, how deep are we? I'd say that we're well into the recognition phase. People are noticing a mismatch between the official narratives and our lived reality. The next phase is usually increased volatility, which we're seeing. Financial, political, and social. All of those are in more or less turmoil and increasing. The trend is all of those areas, the financial, the political, and the social, are all seeing greater and greater tension. And until a new settlement emerges, that trend will continue. It doesn't mean that the system ends tomorrow. It means the system is becoming less stable and more erratic. And this is a type of, they hate to use the reset word too often, but a reset that isn't just a currency reset like the Bretton Woods. This is something that happens globally, as I said, every 3 or 4 centuries. So that's the type of paradigm shift we are potentially facing.
Yeah, I see where you're coming from. And there has been a lot of resets, but this is totally different now. With the global fiat currencies are all pretty bad. It just seems like the US dollar is like the healthiest sick person in the house.
Exactly.
3 years ago, you mentioned that we were trending towards a time when silver would be used up faster than it is produced. Now that is a reality. How much of this trend is causing the increased price of silver? And since you were accurate with that prediction, what do you think is next?
Well, the key is persistent deficits and drawdowns of the above ground stockpile. The Silver Institute has discussed multi-year structural deficits, and they matter, of course, because there's lots of applications where silver isn't meaningfully recoverable. So that's something that, some of the apologists for silver will tell you, that, all the silver that was ever mined still exists. Well, yeah, it does actually, from a physicist's perspective, but a hell of a lot of it's in landfills that are not economic to recover it. How much does that affect the price? In a normal market, deficits can be managed by inventories. But if the inventory is running out, then it can't be. So for right now, we have enough inventory above ground to manage the situation for a while. When inventory shrink and investment demand spikes, prices start to ration the ratio between, who's got to have it the most, and that's the highest price. And that's what we already witnessed in January when the 70% move in a month in silver. Are you kidding me? I mean, this is historic. And not to dwell on it too much, Tiger, but the point is, I think that's maybe a precursor to the very, very end. And the very, very end means a manic panic buying. Maybe we do go unobtainium, where you just call up the coin dealer and they don't answer their phone, or they have a sign saying closed for business, or they have a recording that says, we are buy only, we will not sell, or whatever. Now that's on the extreme end, but silver is an extreme situation. So I wouldn't rule any of those things out. So what we should look for is inventory tightness signals, lease rates increasing, delivery stress, policy shifts, which you're seeing already with the critical minerals, and there may be a floor on the price of silver, and industrial and demand resilience, where with the AI data centers, electrification, EVs, and solar, all we'll talk about all the time, continues marching on and continues to deplete the above ground stockpiles. Now, I want to make a point here because it's just happened recently, and I don't really have enough data to make a real bold statement, but it appears as if we have hit equilibrium for a point in time between East and West. What I mean by that is, doesn't seem to be an arbitrage opportunity between Shanghai and the LBMA New York right now. In other words, the price has become universal. Now, I'm just saying that on your show first. Again, I don't have a lot of data. If it's today only, strike what I just said. If it goes from today onward, we will have a resettling of the market, and we will most likely see silver develop into a trading.
Yeah, I've actually seen one of the coin shops that I'm affiliated with. They turned into a buy only. I've noticed it happen at least once, although I don't want that to happen to everyone.
It's unlikely. I mean, I just threw it out there as kind of extreme and, not to belabor the point, but it's the type of possibility we can see. And a lot of those things are really temporary. I mean, when Rule 7 came in during the Hunt situation, that Rule 7 was you can only sell, you can't buy it. Come on. But that's what they did. But how long did that last? And the answer was not very long, but enough to disrupt the market, force sales, and take the market down. And that's unfortunately the kind of authority that we have in some of the financial markets that we, the people, really don't have much control
over. For people such as myself, I've never heard of Rule 7. Would you care to elaborate just a little bit?
Yeah, you can look it up on the internet and probably get a better explanation. Rule 7 was when the Hunt brothers were, where everyone would say that the Hunt brothers were cornering the silver market. In reality, most of their positions were well below that price, but the market was very tight. So any new buying was taking the price higher and higher. And as the market approached that $50 blow off, the Commodities Futures Exchange, or the CME, came in and said Rule 7. And Rule 7 was you can only sell in the futures market. You couldn't buy. That's what it was.
Wow. Thank you.
Yep.
With China decreasing its silver exportation and the U.S. pouring money into Argentina, where there are silver mines such as Argenta Silver. And then there's other mines such as Vanguard, who's in multiple different countries, including Argentina, which is producing copper, aluminum, lithium, uranium, molybdenum, and palladium. And then there's other silver mines such as Lithium Chile, but it's in a 3-country triangular area. China at least used to be in Argentina and Chile, but yet the U.S. is pouring money into Argentina. Do you see allies starting to shift with U.S. attention on bringing minerals and metals home to the United States to combat the China's control in these markets, which could affect the price of these metals and minerals?
Well, critical minerals have become a geopolitical chessboard. The U.S. and Argentina just signed a critical minerals framework, which is part of the broader secure supply chain. On China, there's been a lot of noise about bans. What is verifiable is that China has used export licensing and quota-style mechanisms in various metals. This is what Reuters reported. China is naming companies allowed to export silver over the next couple of years. And it's not a total shutoff, not at all. The bottom line, yes, alliances and sourcings are shifting. The effect has had a higher risk premium and more incentive to offshore or friendshore supply, both of which can raise and cost and tighten.
With the U.S. having more control on the Venezuelan oil, how will that affect the U.S. stance in the global financial conflict and markets?
Well, energy is a pillar of geopolitical power, pure and simple. It's more important than any mineral. It's more important than silver. But the bigger financial point is that whoever influences energy flows influences inflation, trade balances, and political stability. Recently, the White House issued an executive order framing Venezuela oil reserves in U.S. custody as part of the foreign policy objectives. I don't like it. I don't think it's right, but that's it. That kind of action signals how tightly resources and finances are linked to national strategy. It can support a short-term narrative of stability, but over time, it contributes to fragmentation, more bilateral deals, more regional blocks, less one global rule book, and a fragmentation that tends to favor hard assets and greater geopolitical uncertainty.
3 years ago, you predicted silver manipulation coming to an end. Are we starting to experience that now or not? Was it still yet to come?
Yes and no. Well, we saw the manipulation curtailed for, I don't know, I'm going to just say several weeks. I'll leave it somewhat vague. As we saw the arbitrage between the Shanghai Metals Exchange, Shanghai Futures Exchange, and the LBMA in New York. So there was definitely a physical only draw on the physical silver market that was actually setting the price. Again, that lasted weeks. However, we just witnessed last Friday, the paper paradigm clobbered the silver market. It really disrupted the gold market, but nothing like it did to silver. And that proves that the paper pushers still have a lot of control. So it's losing control over the market, but it has not lost control over the market. So I would say that we're changing forms. When a market is heavily financialized in the paper market, the real physical tightness increases the volatility. And Reuters even noted that the sentiment of flows have been changing from west to east. So where are we? We're in a situation where I think it's going to go back and forth a few times. But I've always stated that I would see a day where the physical reality took over the paper paradigm. And I think we're going to take a few more runs at it and maybe some more disappointments from the paper price management, you might say. But overall, I think reality will set in. And I'll just add to that, Tiger, that as we've already discussed, but I think it bears emphasis, that this critical minerals thing is more or less a U.S.-centric right now. But who's to say that other nation states won't say, hey, wait a minute, silver is a strategic metal, and we need a stockpile. So I could see a day where maybe there's a floor in the silver price. Throw a number you like, 75, $100. Not that it would necessarily be mandated by government, but it could be. And in that case, we would have, a little more stability in the market. We'd also be looking at more of the physical flows rather than the paper machinations that take place. So I'm still, always been pretty bullish on silver, but what I'd be most bullish on really has little to do with silver. It has to do with the general way the financial system is set up, and that's more of a free and fair market, more of a true price discovery across the board. I think that's really necessary going forward, but I don't think we're going to see it overnight. And the powers that be that still have the power to manage prices in the oil market, in the silver market, in the stock market, they're not going to give that power up either.
I've heard periodically of copper replacing silver in solar panels and other products. Silver is the best conductor of electricity at 1.59 to 1.65 times 10 to the ohm meters, and copper is the next best at 1.68 times 10 to the 8th ohm meters, and what seems to be an international run on silver. Do you see copper or any other material replacing silver in the industrial world?
Oh, it's possible. And copper is cheaper and more abundant, so industry will keep pushing the mean of copper being used in solar panels. But there are constraints. Reliability and corrosion issues is number one. Manufacturing complexity, performance trade-offs in harsh environments, and the fact that many applications use tiny amounts of silver relative to total production cost. The idea that the price of silver is wiping out the solar thing is more metaphorical than reality. There could be some places where that's true. So the practical answer is copper can take some share of certain processes over time, but copper replacing silver everywhere is totally unrealistic, especially in high reliability applications where failure costs are huge. That would be all military applications. You would not have any mil spec anywhere at this time that would use copper in place of silver, in my very studied. Graphene is a possibility, but again, it's uneconomic at this time. So, yeah, I think it's overblown. I mean, the silver apologists are real quick to say, hey, look, silver's done, copper's going to do it, and yada, yada, yada. You better sell your silver now. It's going back to $20 an ounce. There's a few people out there like that, and I'm exaggerating somewhat. But I also want to be fair because there was a big breakthrough in the early 80s on mining technology. And Jerome Smith, my predecessor, forecast $200 silver in the mid-90s. And based upon the data that he had at the time, that looked reasonable, believe it or not, because we were in a structural deficit like we are now. More applications were coming on board like we are now. And there was a much more, probably a greater percentage of investment demand on a per capita basis. There's a much bigger population now, so more investment demand, but on a per person basis, it was probably, 5% of the population, 3 or 4 or 5 wanted silver, whereas now it's probably less than 1% of the population. Point being is that we will see perhaps a technological breakthrough that makes what I just said invalid. It happened in the early 80s. He thought that the mining of silver had peaked. For 60 years, the most silver ever produced was around 350 million ounces per year. And on that basis, the change between demand and supply being constant by his thought process, would mean we were basically out of every ounce of silver, in theory, then it will never happen, by the early 90s. And so by the mid 90s, you should be at a much higher price. He forecast 200. However, what happened was this breakthrough in mining produced lots more silver. We went from 350 to 550 million ounces on an annual basis pretty quickly. Now, as you know, Tiger, we're about 850 million ounces per year. So I've always been cautious to say, no, that can't happen. Copper will never work. I'm not going to say that. There could be a breakthrough that I'm not aware of now, you're not aware of now, that could be substituted for silver. I don't see it, but it doesn't mean it couldn't happen. So I just want to get that out there. So I don't want to make the same mistake. I mean, Jerome Smith to me was one of the motivations to do what I'm doing now. And I honor him and his thinking. And it was a lot more than silver. In fact, I go a step further, something I'll say on your interview I've never said before. Opinion only. Throw rocks in the comments section. I don't care. But I'd looked at almost everybody in the financial newsletter industry. Harry Brown, who worked for Jerome Smith, the Aiden sisters, who worked for Jerome Smith, and others. And some of the other guys, James Sibbett, Jim Sinclair, Jim Dines, many of the stalwarts that are familiar to me at my age. Most of the people listening now would know who I'm talking about. My point is this. The silver guys, the Jerome Smith group, to me, seem to be smarter, better, and further ahead than anyone else in the industry. And that was one of the reasons I kind of took on the silver mantle, because I wanted to be the best of the best. I don't think I am. I'll be honest about that. But I'm up there. Obviously, you can only be your best. Your team can only be its best. So we might not be in the Super Bowl, but we're probably in the playoffs.
Well, thank you for that. I especially didn't think about the corrosion of copper. We've all seen it in different things, pipes and pennies and all that, but it adds an ounce of validity for those who've ever seen copper look corroded. So I appreciate that very much. You spoke of vaulting as the most likely source of criminal activity, especially in silver. Has this trend continued, worsened, or gotten better?
Well, I may have said that or alluded that, and, communications are key in all the human endeavors. And, the only way I know to really communicate is to get feedback. So you gave me some feedback. There are all kinds of things that can disrupt it. And vaulting is probably pretty high on the list. I don't know if it's number one. If I implied that, I won't take it back. So let's take a look at it a little bit further. First of all, there are excellent vaulting operations. And if you want to know the one that I use, you can contact me after the show. Not in the comments section. Just go to our main website and send an email to support@themorganreport.com, and I'll get back to you. So there are really good ones, but there are some that have been sloppy. And the risks typically come from unclear titles, pooled versus allocated, weak audit practices, leveraged against inventory, and jurisdictional legal uncertainty. So the fix is boring but powerful. You need clear documentation. Please read your contract. If you don't, hire a lawyer to read it for you. Make sure that there are independent audits. Make sure there's transparent reporting. And make sure there's a clean legal structure that you can sue the facility if there's any mispractice. Many of these contracts absolve themselves of any wrongdoing whatsoever. People don't read that, but they're saving $500. They've got $1 million. I've got people with $1 million in precious metals in storage, and they're at facility A instead of facility B to save $500 a year. And that facility is underinsured. They're not 100% insured. So it is something to be concerned about. I don't want to alarm people because I hate to be an alarmist or throw out the doom card, but it's something that's really spelled out. If you read the contract and you have no recourse, then find another one that you do have recourse. Last one is, can you visit your metal? And the one I recommend primarily, there's others, there's a few that I recommend. You can go see it. You can walk in and there you are. I mean, you can't just show up at the door and say, I want to see it. But you could, make an appointment and come in. In fact, this particular one I'm thinking of, you probably could show up at the door, but it would disrupt them. I mean, these are highly, highly secure facilities with lots of security procedures and processes that need to be, taken into account. I mean, you just don't show up and say, hey, I'm Joe Blow and you got my silver. Well, prove you're Joe Blow. And, anyway, I don't want to go down that rabbit hole too far. Point being is, yes, it's a concern. Please don't be over concerned. But there are times that have happened in the vaulting arena for precious metals, generally, that were not on the up and up. And additionally, there were some IRA custodians that weren't on the up and up. And this just really bothers me beyond any words I can utter. But Tiger, that's the reality of our world. You can't trust it.
That's some truth, and it leads most stackers to the theory, if you don't hold it, you don't own it. However, if someone's able to stack more than a certain amount, it does lead to some issues that if people find out you have a certain wealth in your home, you're more likely to be robbed and your family's more likely to be in danger. So off-site is always an option. And as David said, do your own due diligence and make sure that you can go see what belongs to you. As we are getting ready to close, are there any other topics that you would like to cover? Lectures that you plan on giving and or inform the listeners of what you offer, such as the Morgan Report on your YouTube channel?
Well, I'll just close out with this. First of all, thank you again for having me. I think the final message I would give is gold is about preserving monetary value. Silver is about preserving monetary value and meeting real-world industrial needs. That hybrid nature is why it can outperform gold and why it will be really brutal on pullbacks. For those who want to follow my work, they can find me through the Morgan Report. It's a monthly deep dive into geopolitics, money, metals, and mining. I do member updates during the week, during the month. My YouTube channel, the Morgan Report, interviews like this, you can get through our free email list or go to the blog tab. And my ongoing educational work around sound money and real asset strategies. And yes, I'd be happy to come back at any time.
Thank you, David. You actually kind of beat me to a lot of the things I just wanted to mention, in addition to thanking you. And I was going to ask you if you'd want to come back. So thank you for the answer. I really appreciate that, because I really would love to have you back again.
Yeah, I'm sorry. I appreciate, obviously you're going back 3 years of some things I had and hold my feet to the fire and definitely don't mind that at all. I think, I love doing the interviews, but sometimes I feel that they're too repetitive. There's only so much you could say about a degrading monetary system. Some of the guys, gals out there, got better numbers in their head or whatever. But the point being is, I like the way you outlined this ahead of time, really thought it through and asked questions that haven't been asked before. So thank you for that.
It was my pleasure. I actually really do enjoy your work, and I've watched you for a while, which is why I asked our mutual friend Daniel Diaz for an introduction.
Very good.
Well, everyone, the links for David Morgan, the Morgan Report, his YouTube channel, and everything will be in the description below. I hope you learned a lot. Please stay tuned for the next video interview that will be coming. Thank you for coming, everyone. Good night. Thank you, David.
You're welcome.